Okay, folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond, and what we're going to talk about today are the stocks that we're looking to trade in the coming week. First, we're going to talk about our commodity trades, which is really our long-term strategy for making a huge amount of money as we begin to see the economy roll over and the US dollar roll over. We'll talk about that first. Then we're going to talk about our shorter-term continuation breakout trades. I went over one last week, SNOA Pharmaceuticals. We'll discuss that. We'll also discuss the other symbols that I believe are good candidates for continuation breakouts. Also, we're going to discuss our extreme trades, good setups that we like going into the coming week. Last week we traded MASI. I mentioned it last week on Best Stock Charts. We booked profits on that position. Actually, it may have been the week before last we discussed MASI. We booked profits on that trade. We'll talk about that briefly. So let's begin with our longer term strategic setups. And we've been waiting for this for quite some time. The breakdown in the US dollar. And if you're looking at the daily chart, you're making a mistake because you're probably saying to yourself, Bob, yeah, it was a bad Wednesday and a Thursday, but it was up Friday. What's the big deal? The big deal is that last week, and this is why we use multi-period charts, not just daily charts, but weekly charts, monthly charts. There was a ton of technical damage that was done last week, and I've been warning members, look out below for the US dollar because the market has been sending us signals for weeks that the dollar was weak and getting weaker. And sure enough, last week, the dollar collapsed. Why? It's because while the Federal Reserve has been talking hawkish, it's been acting dovish. And you may be saying, Bob, they rose rates last week. There's nothing dovish about that. Well, what they didn't tell you was that the probability of future rate hikes anytime soon were put to the back burner. Add to that the fact that inflation is ramping up. Also, the Atlanta GDP within 1 week went from Q1 GDP forecast from 3.4 all the way down to 0.8%. So, as I mentioned in my 2017, the year ahead forecast, I have warned week after week that stagflation is a threat. It is the prime environment to own gold and commodities because you have low growth, high inflation, and last week the dollar took it on the chin. It's a massive breakdown in the US dollar. It's the beginning of what I believe to be a multi-year bear market in the US dollar. When will that bear market be in place? When we break down below the lows seen the week of January the 30th. We already have the lower high in place, the prior high being the week of January the 3rd at $26.83, the new lower high at $26.00. Once we break down below $25.65, it is all over, folks, and you had better be looking to own commodities. And last week we broke down below the lower band of the rising uptrend channel on volume, big down volume. So please, no daily charts when you're looking at the battlefield from a 30,000 foot view. You want your weekly charts, your monthly charts to get that higher level view, and that's how you're going to profit in the coming very, very volatile market. So what are we looking at? Let's talk about commodities first. Gold. The daily chart is not telling you the story. Yes, we skyrocketed higher after the Fed announcement, and we were long of the gold mining names, but we're looking to build on our gold names. And we even moved higher on Thursday, up day on Friday, but it's stall speed. I think we're going to consolidate a bit. And we're going to get opportunities to add to or open a position in gold very, very soon. Volume dropped off sequentially, so I don't believe that we're going to go skyrocketing higher on gold right now. I'm a little bit more optimistic when it comes down to the gold mining names, but I think that we're going to get a consolidation and a pullback on gold. But there will be a time very, very soon that we begin building aggressively on gold. Now, the weekly chart is significantly more bullish than what the daily chart is because it tells a bigger story from that higher level view. So members, on the week ahead commentary, which will be coming out tomorrow, I'll be discussing on all these charts, the daily and the weekly charts, to identify the best risk to reward entry point. And if you have any questions, use that chat box below. It's manned all weekend long. We can ask questions with regard to our services and with regards to any questions that you may have with regard to the symbols, and the lovely Nancy will be answering your questions all weekend long. USLV is the next chart up. Daily chart, a good week last week. We're looking to add to this position. We're already long, but the weekly chart is going to tell us a far more dramatic story. Now, on a daily chart, you could see that we have some resistance above here at 1452. Expect some consolidation and then a continuation move higher. The breakdown in the US dollar is going to significantly help USLV in the long term. But right now, we're looking for a good consolidation along this $14 per share level, and then a subsequent breakout. We will be buyers on the breakout, but the key here is that we see volume to the upside. Friday's was an up day, but it was very, very light in terms of volume. So what that tells me is that you don't have a ton of conviction in USLV just yet. So time will tell. Now, what you're going to hear as the dollar breaks down, you're going to hear gold and silver naysayers come out of the woodwork. They're going to try to jawbone down gold and silver because, frankly, they're late to the party. And I'm talking about institutions. The last thing they want you to appreciate is the inverse correlation of the US dollar, gold, and silver. They understand it. They don't want you to understand it. And that's what I'm here to do, is to help illustrate the inverse correlation and the ton of money that is going to be made in the coming years off of the gold, silver, and the mining trade. So please, don't get distracted by these well-dressed, well-spoken talking heads that appear on CNBC. All right, to our continuation breakout trades. Here's an example of what I spoke about last week. SNOA Pharmaceuticals, it was in a pennant formation. It broke out, pulled back, retested the breakout point. The rest is history, and the shares moved higher. The weekly chart, which I'll be talking about with members, is looking really good. Daily chart, a bit overbought here, so expect a pullback. But these are the continuation breakout trades that we like. Last week alone, if you had jumped in on this trade, you would have been up 11% on the week. So this is the value of charts. Please don't listen to the talking heads on CNBC. So the first chart up is Cal-Maine Foods, another commodity trade. Now on a daily chart, we are in a triangle formation. So what we're looking to do is we're looking to open up a position on Cal-Maine Foods on a successful breakout of this triangle formation. I'm going to post this chart in our Facebook discussion group. So if you want to take a look at it and be able to refer back to it during the week, sign up for our Facebook discussion group. Free to everybody. Just send an invitation request and we'll get you access. So Cal-Maine Foods is setting up really nicely for a continuation breakout trade. But you don't want to go buying it just yet. We saw a bearish key reversal on Friday with volume that rose to about average. So expect a continuation pullback. But longer term, we like Cal-Maine Foods. Coach is another one I spoke about last week. We rallied up and into the 3 standard deviation Bollinger Band, consolidated, pulled back, and then we rallied higher. I expect the same type of price action moving forward for COH. And you can even see on Friday, while they tried to take it down, they rallied it off the lows of the day. They flashed a bullish key reversal. They closed it back above support. So what does this candlestick formation tell you? It tells you that there are buyers below willing to pay at a bare minimum $39.25 to support the price on volume. So you have institutional accumulation. We're very bullish on Coach. Next chart up, continuation breakout trade, O'Reilly Automotive. You can see how O'Reilly formed a double bottom setup or a W formation. Here's the left side of your W, pivot point, right side of your W, and it is now building on that right side, and we are nearing the pivot point. Now, these shares can be bought on a continuation breakout higher, and I'll show you what I mean by what it would look like to have a continuation move higher out of the stair-step formation. Now, you can see that we rallied, pulled back, consolidated, broke out, then consolidated once again, then broke out. So this is a very, very healthy pattern. You're forming the lower band of the rising uptrend channel. I'm expecting to see a continuation move higher. I think that these shares can be bought fairly soon, assuming that we make another breakout above resistance. And then we want to add more aggressively on a breakout above this pivot point. So members, more to come on O'Reilly Automotive. And I believe there are options traded on these shares. We'll probably trade the options to the long side. Maybe put on a spread to help finance that options trade. Next chart up, PCAR, PACCAR Inc. A great continuation breakout trade here. Again, this is another stock that has been consolidating for some time. We've had some fits and starts, meaning attempted breakouts only to fall back down into a consolidation range. The real story here is not so much on the daily chart, but the weekly chart. And I'll go over that with members on the week ahead commentary. But the daily chart, you can get a flavor for where we're heading here. On Friday, we had a bullish key reversal. We're nearing the pivot point of this W formation. Stokes are above the 50 level, both lines, good stuff. And look at the volume here. This is institutional accumulation. So the charts are telling you that these shares want to move higher. It's all a matter of knowing when your risk to reward entry point is best. And I'll go over that with members on the week ahead commentary. Alibaba. I usually get a lot of mail on this one, a lot of comments, especially when I'm bearish. But right now, I'm actually bullish on the shares. What I'm looking at here is an inverted head and shoulders setup. Left shoulder, head, right shoulder. Here's your 45-degree neckline. And I think that we're breaking out on Alibaba. And I've been concerned about the weekly chart. And I'll be discussing the weekly chart closely with members to make sure that we have a confirmation breakout on a weekly chart, meaning we break out, pull back, retest the breakout point, and then we put our stop loss in right below, where we'll identify where we should put our stop loss order to minimize our downside exposure, but yet still give ourselves some room for the shares to fluctuate some. So Alibaba looking good as a continuation breakout trade. All right, to our extreme trades. 2 weeks ago, I discussed Massimo Corp, MASI. I'm going to do a video on this. I'll do a recent trade, and we'll discuss how we traded Massimo Corp to the short side. So if you want that video, enter your email address anywhere on the website. We'll get that out to you. You will not be spammed. So Massimo Corp, I spoke about 2 weeks ago, is an extreme overbought trade, and we began to build a position. And I emphasize the word build because you must assume when you enter a trade which goes completely against the trend that you're going to be wrong up front. And if you're early to a trade, it's the same thing as being wrong. And as the shares built up steam, we began to build on our position, and we became very, very aggressive late last week, and the shares just gapped down, and we made a very nice profit within a very short amount of time on Massimo Corp. And honestly, I'm looking to reshort the shares, but not yet. I'm looking for another move higher, and I'll be looking for a lower high. And once I get that signal by the market that we're putting in a lower high, we'll look to open up a new short position on Massimo Corp. But it will not be an extreme trade. It will not be as overly leveraged as I was on the last trade. And we'll build on weakness rather than building on strength as we did with our most recent short. So members, I know a bunch of you were involved with the short side on this one. Congratulations. Good for you. You pulled the trigger. I get thank you letters all the time, but in the end, it was you that pulled the trigger. You showed the discipline, and you, in the end, deserve the credit. So congratulations to you. I'm glad you did well. So let's talk about the extreme trades that we're looking to put on this coming week. TGS. I'm not even going to try the name here. It looks like a South American play. If it is, it's levered to the US dollar in some form or fashion. RSI is at 86.77. You could see that the shorts are getting squeezed now. How do I know the shorts are getting squeezed and they're profit takers? They're gapping it higher, and these candlesticks are forming wicks, meaning the shares are getting gapped higher and sellers are moving in. They're booking profits. Volume is still good, but take note of Ultimate Oscillator. While the price is moving higher, Ultimate Oscillator is putting in lower highs. That is a bearish divergence. So I would not go chasing these shares. Stokes are beginning to put in lower highs. The MACD histogram still looks strong. So would I go shorting aggressively on Monday morning? No, you never do that with these types of trades, because one thing I emphasize to members is that once you believe that an extreme overbought stock can't go any higher, guess what? It humiliates you. It goes higher, and you'll be wishing that you had kept some dry gunpowder. And what is dry gunpowder? Cash, so that you could have added to your position. So these shares probably this time next week, a week and a half from now, will probably be trading significantly lower. And I know you're looking at this chart right now saying that's a bold statement. Well, I'll take you back to Massimo Corp. It was a bold statement when I said that these shares would probably be trading lower in the next week or so. And here we are now, we're having broken a major key upper band of support. Same thing here. I use the same recipe over and over again. This is what I teach members. Rinse, wash, repeat. It's all about your discipline. Next stock up, BLD. We're looking to short. RSI 85.10. It can go higher. I know you're reading Technical Analysis for Dummies and it's saying short a stock when it goes above 70. You would have lost your shirt on this stock. You need to use a discipline. Strong stocks tend to get stronger. We need to respect them. And this stock is probably going higher. Volume is still strong. The indicators are still strong. They're implying that the shares will probably move higher. If you're long, I wouldn't go selling just yet. I would probably put in a trailing stop loss order and have the markets take you out as close to the highs as possible. But I wouldn't open up a new position, and I would look to the long side anyway. And I would look to begin building as the markets send us signals that we are nearing an end to this rally, or at least a pause and a pullback. And we'll be looking at the weekly charts to identify key resistance levels, if there are any. And if there are none, well, then we'll have to rely upon the daily charts and the intraday charts to look for bearish divergences. And we'll talk about that with members on the week ahead commentary. Nutrisystems. All right, so here's one. I've mentioned this one in the past as a possible short candidate, and we didn't pull the trigger. Why? It's because the markets didn't send us a signal that the shares should be shorted yet. Well, yes, back here we had RSI that was near 90, and we were leaning into the third standard deviation Bollinger Band. That in and of itself was not a reason to go shorting. Why? It's because all the shares needed to do was consolidate sideways, thus alleviating the oversold condition on both indicators, and then it's off to the races once again. This is a strong stock. RSI is at 87.40. It's probably going higher. Volume, very strong. That implies you have institutional support. You don't want to fight these guys. But I do see a reason to go shorting these shares very, very soon. So members, we'll be looking to short NTRI probably beginning this coming trading week. But the way we closed on Friday implies to me that we're probably going to see higher highs early next week. We'll look for a great risk-to-reward entry point. Alerts will be sent out to members. And the last chart up is AmTrust Financial, AFSI. I'm not sure what sector they are in the financial services arena. We'll have to do a little bit more research on the shares. We have RSI at 12.62. So rather than looking to short, which is a bet that the shares will go down, I'm willing to bet that the shares are going to go up, but not quite yet. So to identify where the best risk-to-reward entry point is, we'll have to use a weekly chart or a monthly chart to identify where there's historical support, and then we'll look to open up a position once we hit that historical support level. Volume, though, this is institutional distribution. This is not mom and pop selling 100 shares. So in all probability, we are going lower. So I would not go buying these shares just yet. And you may be saying, Bob, it's RSI at 12. How can the shares go down lower? Trust me, folks, they can. You can easily see RSI go down below 10. So don't go catching a falling knife. And that may sound odd coming from a contrarian, but it's true. All the stars are not in alignment quite yet for us to put our toe in the water and begin building up a position in AFSI. That is not part of our strategy to become all aggressive and excited just because we have RSI that's down below 15. That's child's play. You will get burned, guaranteed. Do not go playing in that pool of using one indicator to dictate how you should trade a stock. You need to use price and volume action in collaboration with price action and in collaboration with your indicators. And that's it, folks. If you have any questions, please use our live chat below. Please make sure to enter your email address anywhere on the website. You'll get these videos in the future if you find any value in them. And you'll also get my post-trade reviews, which is where we review our strategy for any one particular trade. And if you're watching this on one of the social media platforms, please follow me there. And members, we're going to go over in greater detail these charts as well as our current positions and where I believe the market is going in the coming weeks. So stay tuned for the week ahead commentary. That'll be coming out no later than tomorrow. Everybody else, have a great weekend, and hopefully I'll talk to you soon. Be well.